Uh-oh, chat. My cat's yelling at the other side of the door. Developed this thing where he prefers the faucet now. So, you can't just give him any old kind of water. You have to give him running water from the tap. Although, you don't learn a skill like that on your own. Something that I had to. Well, he was like curious about it, and then he figured out how to drink from the sink. I don't know. Anyway, that's only once now. He does not want the stagnant water in the bowl, although that is refreshed multiple times a day. Now prefers the sink water, which means he needs to drink more water. Yeah, he just screamed at me though. But I guess we should probably get going on the business at hand here. Trying not to lose money. Stock market. Sure. I think I can make it bigger. Oh, this is cool. The Winklevoss. Alright, chat. Well, let's get to it. So we'll go through the week that was, the last 2 weeks. And then We'll go over the trades. I did label them already. Just need to go through them. And then we'll kind of think of what to do moving forward, because now we have, it's not just earnings anymore, and I don't know earnings coming up are, I don't think companies are going to give any guidance. I think, and I don't know what that's going to mean. I mean, a lot of companies, there's some companies that traditionally don't. I think Apple stopped giving guidance during the coronavirus. So the other thing about stopping giving guidance and stopping this process is it might not come back. Because like, I don't think since the coronavirus, Apple gives guidance. If I'm wrong on that, I haven't listened to an earnings call in a long time though. I kind of stopped listening. I'll at least listen to the calls. I don't know if I'm going to trade them other than what I have on. But I know that from my past experience that even if there's a great quarter, if a company doesn't give guidance, or they give, or maybe they'll just give weak to no guidance, that'll be what happens in this earnings cycle. And let's pull that up anyway, because I think Netflix is coming up this week on a short week. Let's see, we need to pull this up. Okay, I need to get the screens going, I know that. I'm just getting my stuff ready. So probably weak to no guidance, and when that happens, even if you have a great quarter, the prices tend to go down because you can't forecast necessarily what the future is going to hold. Like, you don't know what this company is going to do. Let's see here. Yes, Netflix is on Thursday. TSM is on Thursday morning. Ooh, we have our what do you call them? Semiconductor companies. Big ones. Big ones. Johnson Johnson. Although that, to be honest, like the options aren't very liquid. I haven't traded the stock though, but I know the options, like, they can have wide spreads and they're not super tradable. It has a tempting chart, but it's like I look at the options, I'm like, and then I look at the price, I'm like, I'm like, meh. There's other things you can trade at that price point. The Goldman Sachs in the morning. The banks have got to have, like, I think JP Morgan, all those. I didn't read any of that. Maybe I should go back and do that. That'll be my homework, to go back and actually read what they said, or listen to one of the calls. Like, at least listen to JP Morgan. Yeah, so at least do that. And I have to listen to Amazon because I have a bunch of freaking Amazon. But I think Netflix will be interesting because, regardless of like this whole tariff thing, like, ultimately I think in some way, shape, or form, like, to me it's like, okay, so there isn't like an official tariff on anything, or things are coming about regular things, so to speak. Like, there's a 10% tariff, but that means either way, like, for a lot of things, prices are going up. And even if something isn't necessarily affected by a tariff, one, it's too confusing to know the difference. I've put together some sticks and lit a fire. Like I know a little bit about it, but it's not like I have some organized, you know, furnace running about how I understand this issue. It's basically kind of cobbled it together. I also think when things are really confusing, it's meant to be that way, so like you don't understand and then you give up. So there's a lot of different things going on here. It's like it kind of causes chaos. It really puts those people in control because you think they're the only ones that are know what's going on, when in reality they started it, but I don't even think they know what's going on. I'm not going to give them the credit that they want for what they're doing, because ultimately I just think it hurts regular people, and for whatever reason or another they feel like they need to consolidate whatever they have, money, power, whatever's in their head, because I don't know how these people think. It gives them all of the power, and you're going to them instead of like distributing this. Like it just consolidates things and makes it very confusing. And for like the ease of business, you don't want things to be confusing. And like, anyway, what I'm saying about prices is like, even if, let's say, an avocado isn't really supposed to become more expensive, well, if Walmart has to raise the prices of everything in the store, why won't they just raise it a little? Maybe it's not the full whatever percent, but it's some percent, because everything else in the store is going up. That's from my side as a consumer, from someone who actually goes and buys groceries. That's kind of what I think is going to happen. So like, even if it's not supposed to, they'll call it price gouging. How are you going to stop that? You're not going to stop it. You're not going to stop Walmart or Amazon or Target, or especially Target. Like, they're suffering. You see their stock price. We can go look at it later. They're not doing as well as Walmart or Amazon. And so it's like, well, maybe they'll put stuff on sale. Maybe they won't. But I feel like because it's confusing, because I think in some ways companies can't grow, because I still think there's, so let's look at where the current tariffs are. And we have the countries, but like, what about the goods? So what are the current so they took it off of cell phones and whatever, and that is the largest component of things we get from China, or actually those electronics. I don't know. And I guess we don't have, I think there's still tariffs on steel and aluminum, which I think we get from Canada. Postponed. I want to see what's currently, so there's definitely some things on China. China blocked some of our rare minerals. I found this yesterday. Oh, somewhere. Not the list, but like what's currently in place. Isn't what I want. I found it yesterday. It looked at what was currently still tariffed, which I still think are steel and aluminum. Oh, this is wonder if it's in my history. I'll turn the stream on in a minute, chat. I'm sorry. On my other computer, I think. Okay, so there's still tariffs on steel, aluminum, and vehicles. And then the de minimis threshold has been eliminated. Actually, will be eliminated May 2nd. Man, you better get your Temu orders in. Get those Temu orders. That just hurts poor people. Not even poor people, like just, you know, people want like, I don't know, you want like a cool Zoom background, so you go buy some things and like make yourself look good, you know? Like, I saw like people on YouTube, like they're trying to, you know, just like design their house or something, and they buy stuff from Temu. I mean, I know that's not the greatest in the world, but like, you're just trying to create some ambiance, trying to do something, trying to buy some clothes, whatever, trying to keep up. And so you find this great website. I've never used Temu, but like you find this website and you're able to do that. And now you can't. I don't know. Let's go here. Oh, and then like the other thing is like, we'll look at the 10-year yield. It didn't bring like just so the Fed cuts rates and the interest rates don't go down. And then they put on tariffs and they start selling, someone's selling bonds wholesale. But it would make sense because, well, can you really depend on America paying their bill now? I mean, or would you want debt from America? No. I mean, even just out of principle, like, no. You know, it's like taking or having like a loan to like someone with like not a good history with credit. I mean, we have a good history, but we have someone or something in the office. It's not just one guy, it's a whole series of people that I don't know what their end game is. I guess just to consolidate. To me, it's like a consolidation and trying to protect something. Like there's scarcity of something, but they haven't told the rest of us what that scarcity is. And in a way, they're creating scarcity. They're creating this. It's I don't know, you could go a lot of different ways with it. But we'll see how it plays out. The only thing we can do on our side is react. I mean, and if you are trading, you stay small, you stay nimble. And the one thing that I grabbed onto, and I got to start the stream. I actually have to start the stream. The one thing that Oh, what I was saying was like the only thing I kind of trailed off there. I was looking at something else. I know I'm not there yet. I'm not there yet. I'm working on it. I'm getting there. Oh, I was just gonna say volatility is up, so you have to play volatility. So that's the only thing that I can kind of grab onto as a fact. Like I can't be like, oh, the market's gonna go up or go down, or oh, it's gonna follow some indicator, or this or that. Like, no, none of that's fact. And I guess I'm just looking at price and volatility. Like those are kind of facts. And the other thing in the back of my mind is that the bond prices are going down, which means they're selling, which means yields are going up, which is not what the administration wants. I know they don't want that. I know that they don't want to refinance our debt at a higher interest rate. Because then you're in the problem of, I'd have to find this somewhere, but then you're in the problem of getting to a point where if we're not already there, we're paying more for our debt than our national security and our defense. That's a problem. That's a big problem. All of our money's just going to our, kind of like me right now. I'm like paying off some stuff. Like all my money's just going to my debt. And that is, I'm in a recession. Me personally, I'm in a recession because of that. Not that I'm incapable of paying it, but it's like it takes a lot away. On a personal level, I kind of understand that. On a national scale, this is going to affect people's services. It's going to affect all kinds of things. So we'll see how this goes. The next big thing is earnings. Minus, so like, you know, in like the CPI report, they do X oil and food because it's too volatile prices. Well, I think the big thing, X Trump, is our earnings. But I don't even know, like if Trump says something, then all that, it doesn't matter. Even that doesn't matter. But maybe that's how he likes it. I don't know. I guess the only thing I do know is that volatility is up. Volatility tends to go back down at some point. Better than price. Price doesn't necessarily mean revert. And again, like the way that I don't know if anyone else has made this connection, but I kind of see it for myself as like, not only did inflation increase prices that you see in the grocery store, it also inflated asset prices. It inflated home prices. It inflated everything. And it's like, okay, we're doing this again. We're going to inflate a certain group of things. How does that not affect everything else? And the thing about inflation is it's sticky. It doesn't necessarily go away. These prices don't go down. Just because inflation goes down or doesn't keep increasing, however the rate of change, it does not mean that prices in the store are going to go down. And if there's any increase in the input cost, I don't know, we could look at the PPI. I think there was PPI last week, but that's kind of backwards looking. It's not forward looking. I think you'd have to look at the ones post tariff nuclear bomb. That's what I think. He didn't literally unleash a nuclear bomb, but he unleashed an economic nuclear bomb. And now we're dealing with the fallout. So that's another way to maybe put it. Is there's kaboom, economic fucking nuclear bomb. But let's actually get into what happened instead of me speculating on all these things. We can actually take a look at what had happened. What had happened was, this. Well, let's go get the real one. I saved it, but this is, I can make it bigger. The other one. We'll look at that one in a minute. So this was the last two or so, whatever. Or this is really since Trump got into office. So Trump wins, market rallies, takes office, rallies, all-time highs, February 19th. We get our first tariff dip here. Should have been your sign there. That should have been your sign. And then, like, I'll say it too, like, if you look at this, to me, this was very reminiscent of the end of 2021, I think. When in 2022, I think that's when we had the little crashy crash there. It's very reminiscent of that. It was like you couldn't go long, you couldn't go short. You're confused. It's like really hard to trade. There was no like trend or like I could say like one way or another, and it really wasn't like, yeah, we made a new high, but I mean, is it really a new high? It's like, it's, you know, I don't know. It was just very, I don't know. It wasn't great to trade. And like we were kind of in a downtrend, we rallied back up. Like this was not easy to trade at all. Like intraday trading was not great here. And to me, when the market can't make a decision, it usually goes down. That was in my mind. I should have been better positioned for that. And that's exactly what happened. I mean, you got the tariffs here, it freaking crashes. And then we get these tariffs on China, crashes. And then we have one of the largest crashes in the stock market. Well, this whole thing is like one of the fastest, biggest crashes in the stock market history, followed by the biggest rally we've had. You know, these are historic moves. So I think it is worth kind of reviewing it and thinking about it. So we're now at around a 10% correction. The latest news is that computers, cell phones, those things from China won't be tariffed. So that's like your Apple, and I think semiconductors, or there's something special there. So that's the thing now. Like you have to be very, it's like you think about a sector or an industry, like you have to think about what are the tariffs on that and how are they going to be affected by it. I think there's going to be, going into Easter, going into a long weekend, semi good news, as long as Trump or his people don't say anything, probably sneak up a little bit in the market. But I'll have to kind of look back at things and really kind of, to me, the ground for me is like as a trader or thinking about this, or even as a consumer, it's very shaky. I feel like I'm standing on quicksand. I feel like I'm standing on quicksand and I have to kind of figure out where the next rock is or where the next these destabilized things. And so now you have to be on your toes. I guess that's kind of all I'm saying. It's not easy to make a decision, right? You can't just be like, oh, you know, earnings will be great for these companies, so let's really make a, you know, really look out, you know. I really hope that earnings doesn't send this right back down where it came from. That it doesn't send the market back down. That's, oh, I didn't turn my light on. Whoops. There we go. There we go. The other one. There we go. So that's kind of where we are. We made it through one of the biggest crashes. I did trade this. I made money. I made money going this way too. I didn't stay in the trade long enough though. But we'll go over that. That happened this week. Oh. And I'm still waiting to get rid of some of my bags. Like, I need to get rid of my bags. I like what someone said. I was watching something this weekend and they instead of the mag 7, it's the bag 7. Yeah. Crazy times. And this is only the first 3 months, people. Like, does he front load all the crazy and then just let it happen how it happens? I don't know. I don't know, man. Volatility, though. Volatility is there. So if you're a trader, like, that's what you want. When the market is not volatile, it's kind of boring. It's like nothing to do. So, it's volatile now. So you have lots of two-way action. But these kind of moves, I don't know if those are good moves. Like where you rip down 10% in a day and then you rip up 11% in a day. Yikes. Just yikes. Anyway, that's kind of what happened. We can see it. Do I have it here? That's trade viz. I need Koifin. Bring that up. I even went I went and looked up, you know, now that I have to learn some level of this and certainly not an economics major, whatever, but like, you know, what the fuck is a tariff? What the fuck? Why would you want to do something like this? Yeah, I'll have to go back to that. So this whole idea of like a trade deficit. So the thing that I understand about it is that, yeah, we have these deficits, but because the dollar is so valuable, the dollar is so expensive, America is so expensive and rich, like you want dollars. So we were trading our money for things and they were getting dollars. That was kind of what filled that gap. Like, yeah, we weren't sending them stuff, but we were sending them dollars, and then they could use those dollars to maybe buy things, or they could use those dollars and they could put them in markets. And that component of it too, I think, has been disrupted. Because they're selling the treasuries. So that's one thing I'm going to watch, is whether or not I'm going to look at currencies. So now I'm Forex trader all of a sudden. Or at least watching them, watching the euro, watching the dollar, and watching treasury yields. All of a sudden I'm a interest rate Forex trader. That's kind of funny. Because those tell the real story. Like, how much does money cost? Where's the debt going? Those markets are huge. Like, yeah, the stock market's like $1 trillion or whatever. I mean, trillions of dollars. There's more trillions of dollars in the Forex market. It's a bigger market than the stock market, if you can believe that. That's unbelievable amount of money trading hands every day. So a tariff is a tax imposed by one country on the goods and services imported from another country to influence it. That's another thing. They didn't tariff services. I don't know if that conversation is going to come up, because that's what most of our companies do. We export services to other countries. It's still the goods, currency, and services. And we do this. So in the basics of a tariff is to raise revenues. That's what they're saying. So they're going to raise revenue. The idea is that we have these tariffs. We're going to make so much money on the tariffs that we're going to raise so much money for the government that we could cut taxes. I think that's part of the goal. That's part of the goal, is cut the taxes. And then there was like that thing, I don't know where that's gone in the news, about how they weren't going to tax anybody who made like under 150,000, but you're going to be paying the tariffs, so you're taxed in that way. You still have that regressive tax on top of you. As a person that doesn't make a lot of money, meaning like millions and millions of dollars, you probably don't want to just pay tariff. Like, you don't want to pay anything, because like you are just trying to cover your day-to-day costs. You're not above and beyond yet. You're not there yet. And a tariff is regressive, so it means like everybody pays the same amount, and people in lower income tax brackets pay a larger portion of their income to things compared to like people that make millions and millions of dollars. The proportion of their income that's spent on things is lower than people who don't make as much money. And there's things coming over that aren't computers and electronics that people are going to be able to use. Like, think about like fabrics or I don't know, chemicals. Anything that's not a computer part, I guess, will be subject to some sort of tariff. And like, if you look at how companies run their margins and things, like, this is a very tight ship. Like, it's not some willy-nilly thing. These costs are going to mean something. And unless we all get raises, it's going to be harder to pay for those things. It's going to be harder and harder for them to pass those costs on. I think this, just like anything else, it ultimately hurts like small businesses. So like, if you had some kind of business going, but you relied on China for them to bring over the little gizmo that you're going to sell, or the little thing that you're going to sell, you're going to have to pay up for that now. You're going to pay 100 times more at the port to get it out of the port. And then you're going to pay that, but now you've just paid a bunch of money, so now you have to go and pass it on to your consumer. It doesn't hurt the people it's supposed to hurt. I'll just say that. I guess every time I talk about this, I'm still trying to figure out like how is this helpful? Like, how is this helpful to anybody? And then there was like those I don't know, the All In podcast. They're like, oh, the prices have been so high for so long, la di da 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 da, whatever they're saying. It's like, yes and no. Price, to me, price is like, so if they're saying that, then that means they want asset prices cheaper then. Maybe, yeah, the market crash is like in their favor, buy a bunch of stock, which is kind of what you should do in these times. Like, when it goes down 20% sale, kind of time to nibble, but I don't know. I mean, they think it's going to be something helpful, but like, the more that I look at it and I think about it from my point of view, it's not very helpful for me. And I'm ordinary, and there's a lot of other people that are ordinary, and I don't know. And then the other thing that tariffs can do, so it's a protectionist strategy to protect and keep out other businesses. And what's interesting is one of the tariffs that are still in place are on autos. Luckily, the one company that makes Bitcoin, yikes. Well, there's your sign, everybody. Risk off, baby. Is it still here? Right here. Wait, no. Where is it? be making $100,000. That's the goal. We'll get there someday. Oh, right here. So, who benefits from tariffs on vehicles? Tesla. But who wants to buy a Tesla? Like, I don't want no Tesla. I don't want a subscription. I don't want the thing in my house. I don't want a Tesla. I never wanted a Tesla. Luckily, Ford, 70% of the thing is made in America, so less affected. Everybody talks about GM. No. 52%, I guess 52% is made in America. That's okay. But a huge chunk isn't. They probably have carve-outs or whatever. You can't buy a Kia. Those are shipped over. We have a 10% tariff on. Oh no, it's 25%. It's 25% across the board. And that's what Tesla does though. Tesla like has their different factories and they manufacture in that country. Like, oh my gosh. And then I guess the last thing I'll say is that nobody's stopping him. No one. I mean, I can't stop him. I don't understand why the opposing party isn't stopping him. Like, between the market manipulation, the craziness around the destabilization of a trade war, which in some ways seems more destabilizing than an actual war, which to me is crazy. But we are kind of a financialized society, so this would be kind of the place to wage war if you didn't want to have weapons. And I don't even know, you put these kind of things in place, can you even make bullets and bombs? Can you get the supplies you need if you had to go to war to make a bullet or a bomb? Now that we have these things in place, now that we've like soured relationships with people. This is like burning bridges on a whole scale I never seen before. Like, he's taking every bridge and lighting it on fire and saying, hey, can you cross? Like, this is insanity. But I guess in good news, you know, they're letting the computer stuff come through. China's like, oh, they're doing the right thing. Like, whatever. So, and then there was a lot, like, I mean, every 4 hours I was getting something from Bloomberg about how Apple's doing something. So obviously they're trying to save the market. But like the thing that about the tariffs is like, well, if we're going to reduce competition and we're going to reduce innovation, prices are going to go up, but things are going to get more cheap and terrible. And either, I think, you know, people aren't stupid. Like, they'll buy what they need to for a while. But like, if things don't get better, they're not going to buy. If their jobs don't get better, they're not going to buy. It's just not going to happen. So you're just going to end up in a recession at some point. I don't know when that happens. Like, now I've realized, like, almost every year, really every year, I think that I've been trading. If I think about it, now that I'm thinking about it, they've said there's going to be a recession at the end, like at the end of like last year, the end of the year before, like everybody thought there's going to be a recession. Haven't had a recession yet. Not a real one. Maybe in certain, I think there was like rolling recessions through certain sectors, but there hasn't been like a 2008. You can't even compare it to that. You can't compare one recession to another. I don't think you could really do that. Because there's different things that happen in each one. Like, they're going to form a little bit differently. Like, the things that happen are kind of the same, but like the way they form is different. So This one will be different because the market is in a completely different place and it's for a different reason. To me, it's like destabilizing and uncomforting and confusing. Confusing is always like where you need to take a step back, though. Confusing is like, oh, okay, someone's either intentionally trying to confuse me or I don't understand it, I'm confused. So I need to take a step back and try to understand it better, and understand what's going on. So you don't want to be paralyzed, but you want to figure out, you know, what's happening. And the only things that I see, and we'll go back into the real stuff in a minute. I see volatility high. There are ways to trade that. So maybe take advantage of that opportunity. There's a uncertainty is now getting built into the market. So volatility might stay high. I mean, the way you build in uncertainty is you build in volatility. But I think eventually that'll fade away. There's going to be heightened volatility in the next coming weeks because we have earnings. And like what are companies going to say? How are they going to guide? That'll build more of that into the market. And maybe thinking about what people will buy even in a case like this. So they're still going to go shopping. They're still going to buy groceries. They're still going to probably have Netflix. They're still going to have their cell phone. You know, like those essential things. That's and things that are tangible. Like does a company make an actual thing? Do they provide an actual service? How much debt do they have? Companies that have a lot of debt in a time when you now have to pay more and it's more expensive to get a loan are not going to do well. So these companies have a lot of debt. Do they make a real product? Those are kind of things to look at and kind of ground to, I think, moving forward. Like kind of those principles. Like, do you understand what this company does? Do they make a real thing? They make something. Do they make money? Do they have cash flow? Do they have enough money to pay their debt? Kind of those basic things. So that's kind of what I could look at. And it might be a time in the long-term portfolio to be accumulating things. So like a lot of companies aren't bad. This is just a bad scenario and they'll eventually recover, you know, especially companies with a lot of cash. So, and then, you know, even just thinking about things that are kind of on the emerging side and, you know, who's out there trying to solve the problems that we're dealing with. But I guess ultimately you got to kind of be careful out there. We know volatility. The only thing we know is that volatility is high and hopefully it's not being priced in, like too priced into the market, because that means volatility will probably stay bid, and then that's even harder to trade because it's high all the time. Like you don't know where it's gonna go. But I guess now we'll look at the market that was. So we are up on the week because of that crazy rally. It did give back though, so we went up like 11% in the day, and then it kind of, I think it actually hit 7% down. I wasn't at the desk at the time, but I think, did it go 7%? I don't know. I heard that it went 7% down, maybe, but it wasn't long enough to trigger the circuit breaker. It has to be like not only does it have to be 7%, but it has to be like for a minute or something, and it was only like for a few seconds, and it didn't trigger the circuit breaker. But I guess the good news is we're kind of off the lows. Yes, that's good. Still down on the month. Still down on the 3 month. So there's still some work to do. We were down 19, 18%. So the Dow is doing better than the rest of them as usual. We're stable coming, but we are still in a downtrend. And we'll pull up the graphs here. So we're still in a downtrend. Oh man, face reveal. Face reveal. So we're still in a downtrend. But this was a lot of green volume here. So that's kind of a good sign. So we kind of stopped going down. That's what you want to see. So you want to see that these lows are not broken and we stop going further down. All-time highs? I mean, I think we need to see some crazy growth. Like, we need to see that companies are still kind of humming along though, but without guidance. I don't know. I don't know that companies grow their revenues. They might just stagnate. And best case scenario is we just trade sideways all year. That would be, we drop down and then we just trade sideways. And that would be kind of a best case scenario, but who knows if that'll happen. But on the MES, we're still in a downtrend. On the NDX, even further downtrend, but of course this can move. Is there another plane you're gonna go get?
Yeah.
Uh-oh, the stream can't know about that.
No.
Okay.
Secret.
Okay. Yeah, but everything technically is still below its 200. Like, there you go. And we went into bear market territory. The euro's doing really well though. But they are going to spend a bunch more money on military. You're going to rearm Europe and rearm Japan, which hasn't been done in 40 years. That just means, like, I was listening to one video, he's like, well, if you do that, all you're asking for is another world war.
Arms race.
Arms race. Yeah, now we're going to be in a trade war and an arms race. That sounds fantastic. Let's go. I guess it's exciting. We can just leave it in the positive. It's exciting. We'll have a trade war and an arms war. Let's go. And a semiconductor war. Let's go. War on all fronts, everybody. And alienate our closest allies. That's the way you get things done around here. Well, the euro isn't technically in an uptrend. It's broken through some key levels. I guess we can't say it's an uptrend. This was holding us 200. We have to go look at the chart of the Bitcoin that's trading right now. Should have bought these on the dip, no doubt. These just don't look good. I mean, good for it if it goes back above. Like, I have a trade on right now. I have a vertical on the Qs. It'll probably come back to its 200, so it's probably going to get blown out before I make any money on that trade. But it is out till June, so I'm okay with that. But, I mean, technically we're still in a downtrend. It's like, do you just keep selling the rip now? And that makes it also confusing because, like, yeah, you just sell the rip through the absence of any other news. Especially here, we have the death cross. Oh my goodness. The Russell is weak. But it's probably, like, oversold. I don't have my RSI here. But that was some green volume there. We had some green volume. I don't think you should discount that bar just like over here. It's the same kind of bar. It's like a doji bar. This is a bigger doji bar. That volume was larger though to send it to the next level. And this was going higher, like when it wasn't below its 200. So again, in bear markets, you get wild swings. You just get these wild movements in bear markets. So you do have to be really careful out there. I think maybe short term it goes back up, but again, unless you got, maybe the 200 has to come down and then it could go over the 200. Like, we have to give it time to kind of come down to price and then it starts to move above it. That might be what happens here. Ooh, we got a death cross here too. There's too many lines on here. I need to get rid of these. But I'm bearish as long as it's below this line. Like if it gets above it in some way, more power to you. I don't like these levels up here. I don't, but you can't like argue with it. Like if it goes up there, it's not, you can't do anything about it. Even if you don't like it, you just have to play it. Still bearish. Like until it breaks these levels, like I'm still bearish. You can do whatever you want to do. I'm still bearish. Very cautious. I'll try to get rid of my bags. Let's take a look at the week that was. It wasn't quite like last week, but my winnings are pretty awesome. This is this month. If we could get a rally, that'd be great. I'd like to get rid of some of my bags. And pull myself out of, because I was trying to cover calls, and so I'm basically long. I mean, so yeah, basically long, but I haven't sold anything. Should have added to it, but I was a little cautious. I was, well, maybe too cautious. I should have been buying more. You know, and maybe that's just something to learn, like lesson learned. You see something like this, go buy the things that probably not gonna go bankrupt. Like give it a shot. I could have bought more Walmart at a lower price. Could have bought Amazon at a slightly lower price. I think it got down to like 150. Could have added to the position. I would like to diversify because Amazon and Walmart are kind of similar. But thinking about being a little bit more diverse, I could have went out and got something else. Or maybe even look at that today. Like look at something I could go and diversify with. It's too bad energy is lower, because the only way we really win this fight is like that our energy companies, and that we have the energy that we need to build the infrastructure that we need in order to compete. Like the future needs more energy. Your future is energy intensive. Like to get to your future and to be in your future, if you want people doing more things at a high level, it takes a lot of just like energy in general. It takes human energy. It takes real energy. It's going to take electricity. It's going to take manpower to get all that done. It's too bad that like the market doesn't reflect that our future is energy intensive. And I know like that to me is kind of unfortunate, but like that's kind of where I would look. If they continue to maybe sell America through the treasuries, money's got to go somewhere. So it's probably going into the euro. I don't know that it goes into Chinese stocks. I've never been a fan of Chinese stocks in the American markets. I feel like if you're really going to trade those stocks, you kind of need to be in those Asian markets, because I think they find more, because here it's like an enemy, it's an adversary. So it's like, why would you trade those on the American markets? I never really liked trading those. Yeah, let's look at the trades that were. This is the day the market started ripping. I had a trail stop on this, so trail stops will always take you out. So that's what I've learned, is that trail stops will always take you out. So I have to work with a different way to stay in the trade longer. Like even though it came back down here, I guess you set it to lower your bar. Like you just have to do that. Otherwise you get stopped out, because the trail stop follows you, and then eventually it'll stop, and then price will go through it. Because I missed out on a lot of money here. Just like the other day, missed out on way more. I had 2 contracts here. We could have doubled this. Yeah. This was the 11th. So this is a trend break. This is actually a pretty good entry and exit right there. But I didn't go the other way. So we need to work on that too. And I'm probably on the 15-minute or the 30-minute with these. This was going long shares, I guess? Or was this a spread? Oh no, this is a spread. Okay. This was my Iron Condor, I guess I had on. This was long shares. And I'm fine trading this too. Like, I'll trade TQQQ above VWAP. I'll trade the futures above VWAP. I'm really gonna focus in on VWAP as my VWAP price and volume, which that's what VWAP is. Amazon. This is something I probably rolled. Or I took off. Oh yeah, it was that bear call I took off. Although I don't really know why I took that off. Maybe it's because it was profitable. I think it was going, Amazon was going up, and then I was like, well, I want to keep what I've made on it, so I just took it off. Oh, that's for short. Didn't say short long enough. This might have been an overnight trade on the 8th. Where's my book? It might have been my overnight trade. No, I didn't write anything down for it. That's what I have to stop doing too. If I want to do this well, I need to write everything down. Like why I'm doing it, yeah, unknown reason. This was short. And really like looking to go short up here. Like go short here. Don't go short here. Go short here. Or here. That's where you go short. Don't go short at the bottom of a bar. This one was the 6th. Maybe this was the overnight trade. Yes, this was that overnight trade. I think it broke like VWAP or something, and then it put this here. So if I get into a trade this afternoon, I can't write it down. I have to look at levels though, because like we're kind of still inside that giant bar. We could just stay in that range. It's just a huge range. Maybe we have to go back through it again. Oh. This would have been, yeah, below VWAP. Yawn delay? Oh, yeah, you can hear the yawning on the stream. Okay. How does it look on mobile? Okay. All right. What's this one? This is my vertical bear call. I think it's still like the one that's open. I don't. Did I close one? Maybe I closed one. Sometimes I'll put on like 3 and then I'll close one. Like if we get enough for like fees, I'll close one. No, and I see the same pattern every time. So I'm entering when the market gets choppy. I know that. I know that in my mind. I know I wait 15 minutes and then I enter. So I get up and I do the pre-market prep and I wait. And I have some idea of what I want to do as the market opens, but I wait 15 minutes and I see what happens. Sometimes I wait until, like, sometimes there's a 7 o'clock data. Sometimes I wait till 7. I wait. And I know that that time is choppy and I can't do this anymore. You gotta sit through this chop and don't enter at the bottom of a bar. Stop doing that. And like the short wasn't, that's what was happening at this time though. So like the time that I'm in, that's what happened. After that, this is what happened. I have to hold through the chop because I enter in a choppy time. I have to manage the chop.
Damn.
Should I try not to. I know, but like no, I don't think there's anything that would show anything. I have everything covered. I could double check on all the other stuff though. This might be one that I just put on. I was trying to capitalize on the volatility. That's, I guess I could put that in there, like VIX above 20. VIX above 25. So high. This was short position. I mean, it wasn't a bad idea, but yes, this is a huge gap. I think it would keep going down, but you know it closes these gaps. That's the other thing too that happens over and over and over again. Honestly, on these big gap days and weird news, you know, even like an earnings gap, like it drops down, you could almost, like, especially on the Mag 7, the big boys, they will fill those gaps again before they go down. Like they're not going to just let that gap live there. So that's something I know. That's just something that we have to just follow. Sometimes it keeps going, but a lot of times it'll fill it, then go back down. So you want it to retest this gap. So if you ever see a big gap, that's when you kind of need to just like sit and wait. Like, yeah, it kind of made a new low, like getting people more and more short. But then it's like kapow, and like when does it start doing that? So it kind of falls, so around 10 o'clock it starts going back up again after lunch. Or maybe this was like when they said, oh, tariffs are off or whatever. I don't remember. Alright. Is this the last one of the day? Okay. I don't know what this one was. Did I even write this one down? What am I doing? What am I doing, chat? What am I doing that? Yeah, I need like a jar. Anytime I make want to make extra money, I can save more of my money. But every time I do that, I need to put, ooh, I like this. So every time I do a trade where I don't write it down, I need to put money into the savings account. Whether it makes money or not, I have to decide how much I'm going to put in there. It's like a swear jar. You know, like you say a bad word and then you got to put money in the jar. I don't label my trade correctly. I put money in the savings account or my long-term portfolio. I think that's a good idea. The fourth below VWAP, yeah. Yeah, see, I enter when it gets choppy, and I know this. If I'm gonna go short, I can't enter at the bottom of a bar. I don't remember what time zone this is in. It's 24 hours. Is it Eastern time or is it... I forget. I don't even know if it saves anyway. Like, 'cause this is built into TradesViz. Part of me didn't want to sell this, but I sold it because I was listening to the news, which is probably not a great thing to do either. And it was like the bond markets are crashing. I'm like, oh shit! Like this TLT is gonna just blow out. It's just gonna blow out. I was gonna wake up, and I was gonna see red. I was like, oh man. I wanted to own TLT. Well, you got it. You're gonna own it. Just wait and see. You're gonna own it. And I shouldn't have bought it back. Honestly, I shouldn't have. Like I mean, maybe I should have. Maybe I should have bought it back. It did go down to 85. It's been to 84 before. Maybe if it gets to that 84, maybe then I'll sell another put on it. Because it's like, I don't know. Like, if the bond market falls apart, we're just going to go bankrupt. Like, the bond market is the market. Like, everything is based on that. So, I don't know. Let's turn Bloomberg on in a little bit and see what's going on around the world. All right, that's it. That's it. So... things I need to look at. So I know that I enter, usually, doesn't matter what strategy I'm using. Doesn't matter if I'm playing my VWAPs, if I'm playing the trend lines, if I'm playing the 9 and the 15 EMAs. Doesn't matter. Doesn't matter what I'm doing. I enter around 7 or 7:30, between, well, 6:45 and 7:15 a.m. Western, Eastern, or Western, or fucking Pacific time. That's when I enter trades for the day. I need to think, can I stay in this trade all day? I don't know. The indicators I use, there's a lot of in and out, especially on the indices. That makes it tough. I'm working on 15 to 30 minute time frames. I had to kind of go down the hour. I can't really sit through that. I can sit through about 15 to 30 minutes. So I have to stick to those time frames, and I need to enter on those bars and exit. I can't like go to the 5 minute, but I still do that. So that's something I need to work on. Really sticking to a time frame. I like the 15 minute, and I like the 30 minute. So I need to stick to that. So I know that I enter on a choppy market, so I have to work with that. I don't want to be entering incorrectly in that choppy zone. But you need to do something because that's where stuff goes to and from. I mean, I could wait, like, then if you wait too long, you kind of miss that opportunity. So you like here going short wasn't wrong. It's just how I went about it. So had I gone short here, this trade might have had a better chance. So it was really choppy up until here, which it's 10 a.m. I think that's Pacific time. I don't think that that's Eastern time. I don't know though. Actually, I don't know. I don't know what time frame this is in. I wish it would say down here what time frame this is in. Can I change that here? No, it just says this 20 hours, 12 hours. Anyway, I think I had it set that way. I don't remember. I'll have to go and look. And based on what was going on here, like, you'd think, okay, go short. It was probably below VWAP, and that was that, but it is a choppy time. So I'll just leave that there. I know I enter in a choppy time of the market. Also, the trail stops are good, but if you want to be in a trade all day, it's going to prevent you from doing that. So like on that trade where I did collect $500, I would have collected more had I not had a trail stop. If I would have just set my stop somewhere else and maybe followed it up bar by bar. So I really think too, like for the stop, for the protecting your capital the best you can, it has to be that other bar. Like the previous bar low or the bar you entered on low. And keep it there. Keep it there until it moves in some direction. If it takes you out, it's probably going to take you out anyway. At least you don't lose as much. And you don't lose that opportunity. So I'll have to look at that. Changing my stop to be more strict about being the low of the previous bar, or like if it's a short high of the previous bar, or the bar that you entered on. Because otherwise I'm losing out on opportunity, and I don't like that. I don't like that that could have been another $3,000 trade, and I'm sitting here twiddling my thumbs. I mean, that if I would have done that, that's getting even closer to getting out of this freaking hole and not being a bag holder. I think the other lesson too is like not all longs are created the same. I've got some freaking bags I need to get rid of. And so does everybody else. But everybody's like, there's a bag, gotta get rid of it. So we all be trying to get rid of same shit at the same time. That also doesn't work. So we'll see how that goes this week. And I really would like to understand how, because man, there's money to be made in that futures market. How can I stay in there longer? How can I stay in there longer to capitalize? Yeah, that's something that I really want to know. I want to know. I guess one thing is like we know that things like crude, the commodities trend lines were pretty well for commodities. They also seem to be working with the currencies. So currencies and commodities. For me, the trend lines, what I've seen, I keep this in mind. Maybe just keep this in mind. Like those trend lines tend to be support and resistance. So if it gets down to an upward trend line and it breaks it, it's probably going to go back through it and go up. If it gets to a downward facing trend line, downward trending trend line, hits it, goes above it, it's coming back down. It's not going through it all the time. It's probably 50-50 of whether or not it goes through. That was my... So now what I need to do is maybe treat them as support and resistance and see if that improves the odds in any way. I'll do it on the NQ because that's where I have my profits right now. So I'll use some of those profits on the NQ to play that and see if that works a little bit better. Because anytime it hits like a moving average, a trend line, those tend to be more support and resistance versus like a breakout point. It may still break out from there. It's a good opportunity. Like, okay, it's going to make this thing go. But it tends, what I'm seeing is that it's support and resistance for the indices. It provides a bound. It creates a barrier. But it's still, that maybe that's still 50-50 because there's a 50-50 shot that'll just keep going or it'll come back down. But what I'm finding is that they tend to be more support and resistance, not breakout points. Or the breakout will happen later. It's not going to happen on the first try. So you have to sit through some stuff in order for it to eventually go where you want it to go. So what are some actionable things for next week? Well, maybe let's look at some key levels. So we want to focus on the NQ and the TQQQ. We are still in a downtrend. But there was good news related to Apple, related to semiconductors. We probably gap open. That would be my guess. So I can capitalize on my TQQQ put spreads. My Q call spreads are going to die. Those are going to die. Maybe it won't be so bad because volatility will come in. I'll decide what to do with those. If we just hit the 200 though, I'm not going to get rid of them. Like if we get up there and we're not making progress above it, I'm keeping them. I'm not going to... I don't know what earnings are going to be like. It'll be spotty at best. And yeah, Apple this and that. We're its biggest market. A third of its revenue is from China. Huge part of their revenue. And that's been declining. So we'll see. But to me, this is still a bear market. I think I'd be bullish if it got above the 200. But I feel like the 200 kind of needs to come down to meet price. So maybe this is just sideways. It just stays in the... Look at this range. It could stay in this range and we're still okay. We haven't fallen. We haven't gone up. But we're not crashing. We're not collapsing. So maybe for earnings, it just kind of just does this. Maybe it's another... Because we have the move down, the bear flag, the move down, the bear flag, the move down... Maybe we're just forming some epic bear flag right in here. And maybe we just go sideways. Maybe it eventually goes up. I have no idea. I think if it goes down again, I need to make that watch list of things I want to buy. Yeah. Be more diligent about maybe... Well, I really want to jettison some positions. It sucks. Like, you're in these positions. It's like, okay, well, you're going to be selling covered calls the day you fucking die, motherfucker. Like, sell covered calls till you die. That should be the name of the channel. Make that YouTube video. Hey, what happens when shit goes wrong? Well, you'll be selling covered calls the day you die. Like, okay. Sounds good. All right. So yeah, I guess, you know, not really bullish, fully bullish till it gets above here. We can go down to the 30-minute time frame, so that's kind of where I want to trade. 30 to 15 minutes. We are above the 200 on the 30-minute. We're above VWAP. We were above the 50-day or the 50. I guess it'd be 50, 30-minute periods. Here, so this is a bullish chart on the 30-minute, and we're kind of forming a trend line from here to here. That's bullish. So it probably gaps up to here on the open. Maybe floats up to here, and we'll see what happens on the open. On the 30-minute, it's kind of bullish. On the daily, we're still kind of in a bear market. So, and it could just end up being choppy. I think we're in a real situation here where ultimately we're probably just gonna get a bunch of chop because of this huge range. Like, we need to test through this range in order for things to happen. In this case, it's probably a little bit more bullish. We do have a gap to kind of fill up here. So kind of coming up to here, giving you hope that I can get above the 200. Maybe it does. We shall see. I'm not super bullish until it does that. I know people were buying down here, so we might still see this float up. So probably a little bit more, so maybe I'll change my tune, probably a little bit more bearish than bullish. We might see something like this is kind of what we want to see. We want to see like the price making it above its moving averages, just like it did down there. You know, to be really, you know, have that confirmation of a bullish move. Yeah. Which would probably happen. I mean, with the news that came out this weekend, tariffs or not, more expensive or not, it's probably going to go up. So that's kind of what we're looking at there. Oh yeah, I was supposed to take, I usually take pictures of this. Let me do that. So 5-day, and then we need to go look at the stocks and stuff that perform well. We'll go do that. Since we did the trades, we did that. Yeah, we need to go do that. All right, this was the market that was. Where's my thing? Okay. And then we'll go to stock. Gainer week. Here's your penny pumper plays. low float stocks here. This. Health recovery. Commercial property. So it's a REIT that bought cryptocurrency. Look into that. I wonder if this is something that would still... I could put this on my... I didn't load that up. Let me just put it on the watch list. I'll just put that one there. And then I'll put it on my platform. Maybe my charts to look at. Let's just do... put it here. NAOV. NA. Short squeeze city. Let's go. Yeah, it's just like a short squeeze. I'm not gonna worry about that one. Oh, no. Oh, that's how we did it. Okay. Go back. Let's go by market cap. The gainers on the week were all the big boys. Remember last week they were all the losers. So they bought them back up again. Never goes down. It kind of is a great tariff investment. Not a bad idea. Maybe I'll buy a Colin Berkey B. We'll see about that. It's crazy, my stomach. Gotta keep my weight down though. That's really tough to do, just so you know, chat. Having a hard time lately. Anyway, let's go back. Let's take the picture. Losers week. Market cap. Oh, defensives. Oh, that's so confusing. Like, it was the opposite the week before. It's like a battle. It's like a battle between growth and not growth. Defensive companies. All right. And then the sectors we have to visualize through here. So let's go to sectors. Yeah, gold had a crazy run. So I keep my eye on gold, bonds, and currencies. That's what's going to go in the short at the end, what I'm keeping my eye on. So this week, gold was up, semis were up. I forget what that one is. Tech was up. Industrials up. SPY up. Financials up. Everything was up. Pretty much. Except real estate. 3 months, still gold, and still defensives. So like, and they're down now. So the only thing up is gold in the 3-month period. 6 months, still gold, financials, communications, utilities, and staples. But those have fallen under, so the only thing up here is now is communications, financials, and gold. So we can look at that. We can look at communications, financials, and gold for some additional trades. And I'll keep an eye on gold, currencies, and bonds. And see what happens this week. The sectors. So thinking about new trade ideas, we're going to be looking at GLD. We'll be looking at XLC, XLV, or XLF. So those are the things that have just been up and that have, and then we'll be looking at the currencies, bonds, and gold. Those are kind of the things I'll be looking at. Right now, I have to take a quick break, and I will be right back. Oh, there we go. Now you can hear me. We'll see if this continues. So what I was doing while you couldn't hear me, I was going through each of my pages here and seeing when this switched, and it switched like last week. So that could be something that continues, especially into earnings. So something to kind of look out for. To stay focused this week, I will see if I can do see if I can focus on VWAP as a trade on TQQQ or the M&Q futures. I'll focus on that. I do think that it'd be important to listen to earnings calls because they're going to talk about the future, and you know, if they can't give guidance, then what's the future? That's what my worry. So we'll continue to look at that. And again, I'll be looking at GLD, XLC, XLV. So I don't know if I'll trade gold. If things calm, the thing is, if you're selling American dollars, you're probably buying gold. So it probably still keep going up. I'll look in XLC, look in XLV, currencies, bonds, gold. That's kind of what I'm looking at. And then managing my current positions. Let's go ahead. Oh, and then I was looking at, so this is kind of switching to, so what are my goals for this week? So to focus on VWAP trading. Focus on good entries, good exits. Don't enter at the bottom of bars, the top of bars. Like, try to enter at a good level. Follow your risk management. And try to lose some of your bags, I guess. Those are some of the goals. Lose some of those bags. Maybe I'll try to add another goal. I can't really think of one right now. What I was doing up here was looking at what was currently affected by the tariffs. And again, this is only 90 days, so I don't know how all this is going to shake out. So we have all the other countries on 10% for 90 days, which is a long time. So shipments are going to come in, and then we have giant tariffs on China, excluding cell phones and computer parts, which is a large portion of our trade with them. However, I still think prices are going to go up. Goods excluded from the USMCA, that usually means, what I was able to kind of understand about that was, where did I put it? Oh, right here. So it has to do with like where they're originating from. So materials from North America, such as, so there are 4 different tests available for goods to qualify under USMCA. So the materials from North America, such as American lumber, Mexican avocados, and Canadian mineral ores. Products wholly manufactured from the originating materials in North America. Products manufactured from non-originating materials that undergo substantial transformation in North America. Products assembled in North America without substantial transformation but meeting a product-specific regional content cost requirement. Automotive manufacturer suppliers face additional regional content requirements for passenger vehicles, light trucks, and heavy trucks. As of 2024, under USMCA, a vehicle must contain at least 75% regional content to qualify as originating with additional workforce wage requirements. No changes have been made in the national emergency tariffs ordered on products of China. So they're doing this under a national emergency. That's the other thing we're not talking about too. We don't need to get into that right now. I kind of been streaming long enough and kind of need to take a break, kind of bring everything together. Like I said, summarize. We got to summarize, gel the ideas in our brain, and come up with a trading strategy for the week. Honestly, I think it's chop, and I think you take it day by day. I think that's kind of where I am with like the day trading, and then just monitoring my positions. If there's an opportunity, let's put that on there. Let's say if there's still volatility, let's capitalize on volatility. All right. So we're going to capitalize on volatility, which I can't spell. So maybe I should learn how to spell volatility. Goal week of the week is to have a spelling test on volatility. And listen to some earnings call. I keep saying learning. Listen to earnings calls. With a focus. Because that's the new thing now, right? That's the new thing. So tariffs are like the new AI. How many times are you going to hear tariff in the earnings calls? There you go. The focus on tariffs and guidance. Can't spell. But at least Google could spell. Someone could spell. All right, they got it. Let's just take a quick look at the news that we can find. Tech products. See, this gets more convoluted and confusing, and again, all that does is separate. Never mind. This is stupid. That's cool. It took down the watering knife. Escalation. That will probably go up. It'll bring the rest of the market up with it. Maybe prepare for that too. He's gonna have to get a real job. I think that's part of that too. Like, I don't want to talk about that, but nothing. We haven't escalated the trade war in the time we started talking, so I think we're all right there. But then it's temporary. Oh my god, this is so confusing. Where's Bitcoin? Down 1.8%. Not a good look, chat. I guess overall, be careful out there. I think there's opportunity. We need to let this settle out. Looks like gold. I don't know if it's actually trading right now, but is this higher? Bitcoin's down though, so it's usually like a risk-off sentiment. So we'll see what happens as the market actually opens. And I'll put out my short later. But remember, this is for educational and informational purposes only, not intended to be financial advice or a recommendation. Trading is very, very risky. So please do your research. I'm just one woman on a journey here to see if we can make something happen. We went through my trades. We went through the current situation. We went through the markets. We looked at the highs and low, or the winners and the losers for the week. We went through and looked at the winners and losers in the sectors. That's going to drive maybe how I trade. We're going to keep an eye on bonds, gold, and currencies throughout the week. I think that's pretty crazy. Bitcoin is down right now. That's kind of a risk-off sentiment. Tariffs are on. Tariffs are off. Keep your eyes open. Be careful out there. Have a safe and profitable trading week. Next week is Easter. I may or may not stream. I might stream. Take that back. I might stream Friday because the markets aren't open, and then I'll have time to go through what I did and this and that, and that way I can have some time to do Easter stuff. But happy Easter if you celebrate, and have a safe and profitable trading week.